Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for January 31st, 2023, getting on into the 5:40 time zone. Well, we had a surprise day today. The stock market was a heck of a lot stronger than I think most people thought it would be going into tomorrow's FOMC meeting. Not that it had to be bearish, but it was a day full of surprises. And once it got going, it didn't let go. I mean, you got up over 300 points in the Dow, so that's quite a rally that it put on. And what I don't know is, what is everybody thinking? And I think I understood what they did, but I'm still going to ask, what are they thinking? We had the labor cost index come out. It came out softer in most categories. So when you look at it, you see the key there is that the benefit index down a little bit, the pay index down, the pressure coming off some of the markets there. And that's been one of the missing links that the market's got. Can the Fed get the labor market to help them out and back off? One report doesn't make a trend, but it certainly shows a big wobble. And with that, the market took off. Now, it's widely expected that tomorrow the Fed is going to make a quarter-point hike, that the wording from the Fed, he will still be, and I'm talking Mr. Powell, a hawk. He will say that he's data dependent, is my guess. When asked, he will say the data will determine what we do. Don't expect he's going to say, no, this might be enough. We might want to pause at the next meeting. You're not going to get that, in my opinion. Why would he do that? Number one, he's not going to tip his hand. Number two, I said it yesterday, I'm going to repeat. He doesn't want to be Arthur Burns or Paul Volcker. He wants to be Jerome Powell. And Jerome Powell doesn't want to be talked about the way I've talked about those gentlemen with their mistakes. So he'll stay longer and maybe raise a little bit more. Is there probably another hike after this one? Probably. Then it gets wild. What might happen on the third one? Will it be necessary? I think the data will tell the story. We also have on Thursday the European Central Bank and the Bank of England coming out. And then to make matters even on a crazier week, you have the non-farm payroll on Friday. Along the way, we're going to get ADP jobs tomorrow, unemployment claims coming out this week. You got a lot of data coming at you. So when I look at the S&P, you're down for the week 0.12 at this point. Okay, basically not much going on. The market's been drifting somewhat sideways here. The bent of the market is bullish. You've had a pattern and you continue with higher lows, higher highs. Now, for those of you that have taken my outside day course, you had an outside day today. You're on alert. You know what that means. I'm not going to give it to the people that haven't taken the course. Where's the support of the market? At the 18-day average and the 200-day. What happened? We have had now a market where you've had a bullish crossover. And if I take you to this, you can see what I'm talking about. Here is the market on the close of business Monday. You had the 18-day under the gray. Today, Tuesday, the number climbed over it, and tonight it's staying over it. So we've had what's called a bullish crossover. Now, it's not a death cross and all these other golden numbers that they label them. It's a sign that the market still has the upside momentum. And very important, if you get a shakeup tomorrow, in between the 18, the 200, and the 100-day average is going to be where the support zones come in if something shakes the heck out of this market. As for the upside, I think it'll be very contained at the 41.21 level if it can get there off of the FOMC statements that come out. And this is so important. For those of you that understand embedded readings, let me just show you. Let's get back to Monday. On Monday, you lost the embedded reading. The only time you can get it back is the day after you lose it if both numbers revert to being over 80, which they did today. So we've got our first little wobble, but it regained it. This was called what kind of trap? That's a bear trap. Why? Because the people that thought you were going to go down with that to right here, those people that thought you would go there, and that often happens when you lose the reading, unless it's gained back the next day, they got caught here. And they're the ones, I think, buying their way out of the market. So now the market doesn't have that as the downside target, okay? I also think that I would have told clients to get out yesterday. I don't mind telling you that. You lose the embedded reading, out. You can always get back in, but why in front of the FOMC meeting? And we'll see if the market can hold these gains or not. It's down about 10 points right now. When we look at the NASDAQ, it never did lose the embedded reading, and now it's fighting a battle. In fact, it's done it for 4 days in a row at the 200-day average against the upper Bollinger Band. Worth noting, you're in a big resistance area, but the tone of the market's going to get set with the emotion tomorrow that hits between 1 o'clock and then again 1:30 to 2:40 or so, 2:15, whenever Mr. Powell ends his press conference. The other thing you have to deal with before we go to the next chart is you're going to have to deal with the yin-yang concept. When Mr. Powell speaks at 1:30, what time is it in Asia? Europe's already gone out for dinner. They've gone to sleep. They're not sitting at their trade desks, all right? It's 7:30 at night, whatever the case. Not happening. So by the time you move around the country, around the world, you get the Asians, they'll wake up, they'll react to it. Then Europe will see what Asia did and what the U.S. did. They'll either accept it or go the other way. And then it comes back to us. And of course, when it comes back to us the next morning, you're greeted by another series of events. Right first thing in the morning, the European Central Bank and the Bank of England. It's a rough week to trade, let me tell you. Trade in terms of you're going to get reactions off all these reports. The Dow is in an uptrend, but caught in sideways action, just sort of meandering around right here, which makes sense. And the Russell still has its embedded reading. The target here is the 1957.60 level. You had another outside day up. Keep your eye on that. That's going to carry us over to the VIX. And the VIX got back up, and it keeps fighting here at the 18-day average, fighting and staying bearish. So these are all elements that are bullish, the stock indices, because this market is not acting bullish. Typically, when the VIX falls, the stock market gets a bid, typically. Then we get to the bonds and notes, and here's the big event. Keep your eye on the Bollinger Bands. Notice how they're narrowing in. That tells you a story. If you don't understand how to work with that pattern, click up here into the course on the Bollinger Bands. At any point, you can get to that later in this. It'll take you right there. You're fighting your battle, and I think upside's going to be contained at 131.29. Downside will be contained around 128.13. I think you're caught in the middle of no man's land for the time being. I think the 10-year note's going to do the same thing in the 5-year. When we get to the dollar index, let me teach you this beauty, and it was classic what I teach in that Bollinger Band course. So here is the market on the close of business Friday. Both numbers are under 20. You lose yesterday that reading. You lose the embedded reading. The market will often, real often, make a run to the 18-day average before it takes out the most recent low right in here. That's all you're looking for. No more. Know the trend's going to run. Get that out of your head. This is the close of business yesterday. It tells me as a trader I don't want to be short anymore. The market rallies up today, goes right to that number, and that's where you're sitting at this point in time. Now, in the process, you have higher lows, higher highs, so I'm stuck waiting. Notice how the bands are narrowing in similar to what we see in the bonds and the notes. In the euro, it's the flip-flop of that. If I walk you back here, that's why I want you to learn this so much. You can do this yourself. We had so many of these moves just happen in spiders and ETFs as well. I'm laughing at it because they're an advantage to me. And you know I'm going to create a service to give you how to work with these contra trends. So basically, I am looking for this market in very short order, not weeks. We're talking days at the max to make a run to the 18-day average. And I'm wrong. I know where I'm wrong. Take out these highs, and I'm very wrong on that. This is what the market did today. Boom. Now you've got a downtrend, but the bias is up. It's perfect. You have this market is fighting to stay in an uptrend. The dollar's trying to stay in a downtrend, and there's nothing to do. They've neutralized themselves in front of the report. The same in the British pound. If you come with me to the British pound and you step back with me just a little bit here, right here, okay? You're at 80.19 on Monday. You lose the embedded reading. You don't want to be in this market, in my opinion. The odds favorites going to the 18-day average. Oh, excuse me. It's within about 5 points, 8 points of it already. Then we get to Bitcoin. Now, Bitcoin has that embedded reading. Therefore, the breaks in this market, I still think, are getting bought by the pros as they're looking for these markets to pop higher. Can they get to the Bollinger Band again? Don't know. They hit it here and they went sideways. The key is to get over that high. You had an outside day down. If you've taken my outside day course, it shows you what to do if you take that number out, okay? I won't spill the beans here. In Brent versus WTI crude, you've come off the low. I don't think you're going back up here, but I don't think you're going anywhere right now. Why? Oh, I forgot. Tomorrow's OPEC meeting. So we'll see what these big boys have to say about production. So that's coming at you. There's so much data right now that you're glued to your set, but it's hard to pull the trigger on trades because if you misstep and a piece of information comes out as a surprise, you will have no chance. The market just disappears on you the other way and you're caught. It's a good time to be in cash and you watch a lot of this. In April Brent, you have fallen back into the main support of the 100-day average in green, 18-day average of close. And here too, you had lost your embedded reading weight and the market finally got down today. Well, actually, yeah, today, that's Wednesday. Today, got to the 18-day average of closes. What'd you do here? You lost your embedded reading. You didn't really have it. You just fell back and you're fighting a battle now between the 18, the 100, and sitting here. But there's a bearish bias in the crude markets at this point in time. You can see that at this point here. Then we get to the heating oil, which rolled over. It slid right through the key averages. I thought you'd get more support at the 200-day in the gray, the 100 in green, and the 18, just like they didn't exist. Therefore, the moving averages aren't playing a big role. This is more of a momentum play, and it's still bearish until you get back over here. Does it have the strength to get back to the Bollinger Band, or is it going to get too oversold very quickly is the question. And in that gas, as long as you have the embedded reading, each of the rallies gets sold pretty hard by the pros looking for the market to come down. Again, 258 is your next support. So the important part of all this is you're in a zone where you're getting all these plays off the Bollinger Bands and momentum. If you haven't learned, just give a click up here. Take a look at the course. That'll help you. I'm Ira Epstein. You have a good day.